Our next speaker is for the Valley Valencia region, Matt Dierckman, Vice President, CB Richard Ellis, Universal City. Thank you, Matt.
Thank you very much, Joe. I guarantee I'll probably be one of the quicker ones tonight. So the Greater San Fernando Valley, I'll go to the next slide there. Greater San Fernando Valley Northwest region basically consists of North LA County. That is the San Fernando Valley to the south and the Santa Clarita Valley to the north. We have kind of a unique market. It's more the owner-user market. Smaller buildings in comparison to most of the markets here today. The owner-users are generally one-off companies that tend to live in the area, operate their business, like the fact that they can do easy commutes from Santa Clarita, from LA. It just makes it easy. The interesting part about the valley, especially with the recent expansion of the enterprise zone, is that just about all the industrial base in the Santa Clarita and San Fernando Valley is enterprise zone eligible now, at least while it lasts. Next slide, please. The total square footage of the market is about 170 million square feet. Of that, about 3.5% is currently vacant. The interesting thing about that is that the availability is actually about 8.2%, so it's about double the vacancy. While we had a negative absorption of about 960,000 square feet last year, there were some positives. The last 2 quarters actually saw a positive absorption of about 265,000 square feet. Sale prices and lease rates. Lease rates are down about 17% over the last couple of years. It's interesting to note that the asking sale prices are still relatively high, but the actual sale prices are considerably lower. I don't know if the sellers are just hoping for those 2007 numbers, but they're definitely not getting it these days. In fact, if any seller or owner wants to sell or lease a property, they've got to get pretty aggressive in this market. In review of 2010, I think there was definite improvement overall. We had the highest overall activity level since 2005, and it almost matched 2007 of about 5.4 million square feet. This was probably attributed to a lot of short-term leases, a lot of cautious companies in the market. Obviously the below market pricing, aggressive pricing, people taking advantage. Lots of teaser rates in the valley right now, and it's pretty easy to get the free rent these days too. Surprising facts of 2010 were the increased sales. Again, this was largely through the owner-user groups. Very attractive SBA financing, very low rates, low sale prices. In fact, the last quarter and fourth quarter saw 60% of the activity being sales versus leasing. Usually, it's opposite that. Overall, I do a lot of cold calling. My specialty is tenant rep, and so I'm talking to a lot of different industries, and I think the majority of people I'm talking to are saying that they're seeing improvement. Sales are up, they're positive, and the surprising fact was we saw a lot of manufacturers, defense, and aerospace companies kind of leading the way last year. That being said, I think everybody's still cautious and kind of holding tight. Kind of leads me to the next slide. This is a manufacturer out of Silmar. They actually were in about 41,000 square feet. They make autoclaves. They were expanding pretty fast and more than doubled in size to this 100,000 square foot facility. I talked to them the other day, and they're actually still in their 41,000. I'm wondering if they might use the both. It was an SBA deal, about $9 million, $92 a foot. That would be considered a Class A building for our market. It's up in the Valencia region. In fact, our guys here from B of A did the loan. Next slide. This was an interesting sale. This building sold to a nonprofit company, and the City of Los Angeles actually gave the nonprofit a grant of about $1.2 million to help towards the purchase of the building. Another interesting fact is they had to get kind of creative on this deal to make it happen. The seller actually leased back about 15,000 square feet of the rear of the building free of rent for 30 months. That was about a $250,000 to $300,000 rent concession, which really takes the comp to about 5.4 or 5.5 million in the market. Next slide. This is an example of a larger deal in our market. 130,000 square feet would definitely be one of the larger leases in the greater north region. But it was kind of typical last year. It was a short-term lease. The company needed the space to expand. They had contracts, but they were nervous about committing to something longer than the 15 months they did here. So they got a great rate at 50 cents gross, did the 15-month lease, and hopefully they'll end up extending that. This would be an example of a company taking advantage of the low rent numbers. This deal at 40 cents gross. Now the building is inefficient and functionally obsolete, but even at 40 cents gross, the market was probably 55, 60 cents in the last couple of years. This company basically consolidated into this building after looking for 2 or 3 years. Next slide. So for 2011, I think we're going to see selling availability and vacancy rates. I think the vacancy rate will probably remain close to about 3.5%, but if the activity stays positive, I think the availability rate will actually come down a little bit. If that happens, the declining sale and lease numbers should start to stabilize, and hopefully with the better activity and the positive signs, maybe we go back up. While businesses are doing better and people are optimistic, I think they'll still remain very cautious and conservative, especially when it comes to their real estate decisions. Spec development and construction is almost non-existent in the valley because of the lack of land anyway. Valencia, it has a little more, but with the economy, we don't expect to see anything this year. But overall, I think everybody's positive, slow positive growth for 2011. Some hurdles to get over, but a positive market. Thank you.